All right, guys, we're here to talk about interest rates today. Talk a little bit about how to get the best interest rate, what to do, and all that kind of stuff. First thing I wanted to chat with about is like how to find out what the mortgage rates are at any given minute, where to look, what's accurate, and all that kind of stuff. A lot of people, I'm assuming, just go to Google and search, today's mortgage interest rates. I do it often. I gotta admit, like that's usually like the highest. Like they're always the highest there. Right now, I'm pulling up, the Google, and I type in mortgage rates today. You can put the loan amount there, how much you're putting down, the state that you're in, what your credit score is roughly, and it'll spit out what it is. 30-year fixed and 15-year fixed is usually what people are looking for. Right now it's saying 8.22 is a 30-year fixed. So that's the Google. That's a quick way just to say what are they. I will say like almost every time I go to the Google, it gives you higher than what it really is if I were to talk to like a lender and all that kind of stuff. So another calculator that I usually have right on my phone is from Zillow. They got a great mortgage calculator. I'm assuming you're familiar with Zillow. You can search for homes, blah, blah, blah. They have a really great calculator. It fills in the interest rate automatically, and they're supposed to be filling in like what the current rate is. And to give you an example, the current 30-year fixed rate that they got sitting here is 7.244, and I think that's low for some reason. I usually kind of adjust it higher, a little closer to what the Google rate says. But the reason I like the Zillow mortgage calculator is because you can include all your stuff. Typically, when you take out a mortgage, the bank's going to pay your taxes for you and your insurance, and you can include that in there. If it's a condo, you can put the association fee in there and get a really good idea of what your exact monthly payment is with everything in there. So that's how we look at it. Thanks for watching. I'm Doug with the Make Maine Your Home team over at RE/MAX Oceanside. So make sure you stick around to the end of the video because I'm going to show you how to get your interest rate down. There's a couple like tips and tricks that I'm going to tell you about. So I appreciate you watching. Remember to hit subscribe and hit that little bell so you get notified when we do videos. So moving right along, we talk to a lot of clients who are looking at buying a house and they might say, hey, I want to wait for interest rates to come down and all that. The market right now, and really probably in all markets, when interest rates go up, it doesn't necessarily mean like prices are going way down. I will say like interest rates go up, the demand pulls back. The market that we're in right now, there's still no supply. So there's not much supply and the demand is still higher than the supply, which means prices are kind of leveling out, but not falling. You don't necessarily want to wait. Ideally, if you're able to find a property that fits into your monthly payment, I mean, if the interest rates have gone up too high where you just can't buy a house, unfortunately, there's not much we can do there. But if you're still in a position where you can purchase something, maybe it's a little tighter right now, but if you buy now and then when the interest rates go down, demand's going to come back and it's going to be very competitive. So when that happens, I'd rather have you just kind of refi and save yourself some money on a monthly basis rather than scrambling to try to buy a house at a higher price. If you wait, it almost never works out. You don't really want to wait just because the interest rates are high. If you can still afford it, I highly recommend getting out there, finding a property while there's not as much competition. There might still be some, but not as much as there has been in the last few years. And you can purchase a house that's a decent price, and then when the interest rates come back down, maybe to 6 or even in the 5s, that's when you refi and you get a better rate and help out your monthly payment. All right, so to finish up, I'm going to give you some tips on how to bring down your interest rate. Probably the best way to do it is what they call buy points. When you're looking at a 30-year fixed, any bank, you can say, hey, I want to give you a bunch of money right now and then bring my rate down. Okay, like let's say it's 8% is your rate now. You can give them money to give you a 6% rate. Don't quote me on any of this stuff. I'm not a lender. You can pay points. Now, the good thing is in a market where maybe there is less competition, you can go to the seller and say, maybe make that part of your negotiation strategy. Like, hey, I'll give you X amount for the house, but I want you to pay some points to get my interest rate down. That's a great way to do it. Another way to get your interest rate down is to maybe go from a 30-year fixed mortgage to a 15-year fixed rate mortgage. Now, not everybody could do that if you don't have the financial ability on a monthly basis to pay that. Typically 15-year loans are higher monthly payments. So you got to be, of course, mindful of that. But 15-year mortgage rates are typically a lot lower. So if that's really what you want to try to achieve is a lower rate, maybe look at a 15-year. And again, you can ask sellers, maybe try to negotiate it to bring those rates down in any of these options, try to get them to pay some points to bring your rate down. Another thing to look at is ARM, adjustable rate mortgages. Now, I want you to be very careful. I'm going to give you a disclaimer here. There is a lot of risk here. Make sure you're really looking at the adjustable rate scenarios. But typically you get a much lower rate. Again, I'm just speaking generalities. Let's say you get a really low interest rate, but you're only going to have that low interest rate for 5 years. And after 5 years, it's going to jump up to whatever the going rate is at that point in time. A lot of these have caps on them, like it can't jump up more than 2 points, et cetera, et cetera. But you just really want to be mindful on those. Go into those with your eyes wide open and have a plan. That way you don't get stuck. You don't get stuck at all in that scenario. But that could be a great scenario for you. Lastly, and we don't see a lot of these, but there are what they call assumable mortgages out there, meaning if somebody took out a mortgage years ago, that's assumable, meaning you can take on their loan. There's not a lot of them out there, but if you ever run into that scenario that you can maybe do that. I know the VA loans, I think almost always assumable, and you could take over that mortgage and then maybe get out a second mortgage to pay for the rest or whatever, so that's another way that you can look at that. It might be worth it to always ask, the seller if their mortgage is assumable, and that might be an option to take over a very low interest rate mortgage and could help you out a lot. So it's always worth the question. And I suppose one last thing to look at is maybe like an owner financing scenario. If somebody doesn't have a mortgage on their property, maybe it's worth it to see if you can owner finance that, meaning the owner becomes the bank, and maybe you can talk them into a lower interest rate, or at least lower than 8%, and make it attractive to them that way. Typically, you're going to need a big down payment to achieve that. But, it's always worth asking. Anyway, those are some ways that you can bring down your interest rate. Hopefully that was helpful. If you have any comments or any, maybe information on something I missed, love to hear from you. Leave a comment below. And remember, if you make Maine your home, you don't have to do it alone. Please make sure that you subscribe to the channel and one of these buttons over here. You get a lot of great information about real estate, the state of Maine, cool things to do, all that kind of stuff. And of course, if you have any questions at any time, comment below or hit us up on our social media platforms, and we'd love to help you out. And we love talking about Maine and real estate in Maine.